You guys ready to go? Yo, yo, yo. Hey, welcome to Forex.Today, the YouTube community for Forex traders. About 20,000 of us. Yeah, that's pretty cool. Awesome. Thank you for being here this morning. Thank you for being a subscriber and a positive contributor to this fantastic community. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but it's always a good idea to stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader just like you. I've been doing this a long time and I still love it. Technical analysis, fundamental analysis, macroeconomics, trader psychology, behavioral finance, scalping, spot trading, swing trading, position trading, carry trading. It's all part of this game that we call Forex, and I love it. Love all of it, really, honestly, love all of it. So it's really cool, and we're blessed to be able to do this as a career. But maybe this is something that you want to do as a career, but you still have a job and you still pay money to commute. Think of it. You pay for a car and fuel and tires and maintenance, insurance, just so you can go to your stupid, lousy job. You should probably end that as soon as possible, huh? And live the lifestyle being a currency trader. This is my home office. Welcome to my home. So very cool. So anyways, thank you for being involved. Ask questions. I will do my best to help. I consider myself a servant. So you're the boss. Let me know how I can help. Today we'll go through the calendar and then we'll go through the charts. Keep it pretty simple. If you need additional resources, you're like, hey, Wayne, these webinars, these live streams are great, but I need help. I need to know how to trade. I need to know about fundamentals and technicals. I need a good broker. I need this. I need that. Hey, in the description below the video, there's a link to my book, Strategic and Tactical Forex Trading. There's a link to free training videos on the FX Bootcamp YouTube channel, a link to paid video training courses on fxbootcamp.com for a whopping $88 a year. There is a link to my chart templates, and of course, there is a link to tradersway.com, an ethical, trustworthy foreign exchange broker with fast execution speed, narrow spreads, huge swaps, world-class customer service, and above average good-looking people. Okay, all those resources are good, especially choosing a broker. That's going to be probably the most important decision that you make, because whether, regardless of what style of trading you like to do, like you're pure price action only, or you love Elliott Wave, or you're a fundamental trader only, or you're a scalper only, or you're a carry trader only. Regardless of all those decisions, you need a broker that you trust. And one great way of doing that is look at how much your brokers pay you in swap. And in many, many, many brokers, they actually charge you negative swap either way, which means they're actually taking money out of your account that would be owed to you, but you signed up maybe because they promised you they'd be cheapest, and then you didn't read the terms, right? The terms in the contract when you signed up, you're like, whatever. And you signed up, and what it said is you're going to pay negative swap either way. Well, Trader's Way pays you swap, good swap. So, okay, that's what you want, and that's a sign. That's just simply a sign. So let's go through the charts. But before that, let's do the calendar. We'll also do, besides US dollar and Japanese yen, we will also do Bitcoin, gold, and oil. Does that sound good? Cool, let's get on with it. Okie dokie, let's get there. Let me get the calendar. Forex.Today. Forex.Today. Today is Forex.Today. I'll click on calendar. Gonna come back to you. By now you should have somehow realized what you got to do. All right, let's go through it. By the way, everybody happy? You have a nice weekend? Paulie says swing trader invitation. Yeah, well, it's just watching that one recording, but you get a good idea, right, Jimmy? Great weekend. Awesome. Before we go through this, the big news that's going on. So I traded Asia last night, and around 8:30, it was apparent, 8:30 at night, which is 8:30 in the morning there, but it became apparent that the China economy that has been closed for COVID is remaining closed. And in fact, now Beijing is in trouble. Okay. So, that's the big news. The other thing, if you watch the swing trading video, okay, if you watch the swing trading group video on Thursday, we talked a lot about yield curve control. And then on Sunday night, so last night, the day trading group meets on Sunday night. So, you know, I'm already a full day into the week. Like literally, I've spent hours and hours and hours and hours trading already. And it's Monday morning, but I'm already on my second day. But one of the things we looked at was an important yield on the 10-year JGB last night, and we knew what was likely to happen today. And I capitalized on that information, and I hope you guys did too. And if you're like, but wait, whoa, what? Okay, well, if you're missing all of this, go to fxbootcamp.com, pay the $88 for a year. Okay, inside of that, you'll be able to have a sample now. I just posted it yesterday. There's a sample of what the swing trading group is like, and by just posting the most recent meeting. So it's Thursday's meeting. And the whole point is for you to see what you're missing. And of course, you almost see what you're missing. What you don't see in that video is the 45 minutes of collaboration between traders, right? But anyways, you'll get a sense of what you're missing out on. And that led to analysis that helped for the day trading group. And the day traders, because of what we did in the swing trading, because day traders get swing trading too, we were well prepared for today, and then money was made. So, lovely tulliumum. So we'll do all that in a second. Let's go through the calendar. Okay, we got durable good orders coming out. You know, I usually don't like that because of the volatility and all that kind of stuff. And I don't know if it's even a good indicator to track. But if you're interested in buying Boeing, and Boeing is reporting this week, you know, Boeing's being hurt by a lot of compliance issues, as we know, and public relations issues, because nothing's good about crashing an airplane into the ground. So Boeing is relatively hurt by all these costs. But if you're going to make a 20-year investment, what would you look at? And you'd look at, well, it will travel continue to, or will travel grow in the next 20 years. And the number of travelers, and in particular airlines around the world that need airplanes, is high. Plus now with fuel costs likely to remain high versus, you know, not long ago, a lot of existing airplanes are being retired because a new Boeing is significantly more efficient on fuel efficient than the old ones. So the old ones are getting scrapped, and the new ones are getting bought. And so there may be a lot of demand for Boeing, and maybe it's undervalued if you have a 10 or 20 year outlook. I don't know. That's your call. But if someone was to buy an airplane, you'd see it in durable goods. Honestly, I don't think I actually really care about durable goods, but there you go. Later on today, RBA announces, well, actually, it's not RBA, is it? Well, anyways, inflation in Australia comes out. Right now, iron ore prices are down, copper prices are down, oil prices are down, gold prices are down. Inflation is probably down. And look, the last CPI was 3.5, and they're expecting 2.0 now. So let me make a quick comment here. There's a lot of doom and gloom in the market right now, and as of today, it's because of China being continue to being closed down because of COVID and likely to remain closed for a very long time if they still have COVID. Look, there's no COVID in America anymore, right? So and China's like worse, right? Worse than 2 years ago. So that's really bad news for global markets, and Australia's getting shut down. But the upside to this is, hey, you wanted lower commodity prices? Well, now you're getting them. Okay, so maybe, right? But then, of course, that doesn't help supply chain any, but whatever. So take a look at this. Pretty rare to expect inflation to drop by 1.5% month over month. Well, this is year over year, but since last month. Okay, Bank of Japan reporting. Hey, good opportunity to read. They're going to talk about inflation levels. They're going to talk about differentials between import and export. And those are the big things. So if you're in one of the paid membership groups at FX Bootcamp, you already know import-export data. You already know yield curve control. You already know current inflation, and you already know inflation target. So once again, if you're a member of our community here and you don't know those things, I'd say half the people in this chat right now know those things, could blurt them out. Just blurt them out. And you're like, I don't even track that stuff. I'm supposed to track that? What's yield curve control? And again, you should be able to say, well, that's the new policy implemented by the Bank of Japan, right? Which they call quantitative and qualitative easing. Did I say what? Yeah, qualitative and quantitative easing through the YCC. And that's what's going on in that world. So boy, oh boy, if you're not paying it, if you don't know those things, you need to sign up. Anyways, going out to Wednesday, Bank of Japan interest rate decision and policy statement. Okay, that's killer, man. Okay. Still holding and controlling. Right. So that's why I bought yen last night. All right. Thursday. Well, this is still just the follow-up here. So lots to do Wednesday night, Thursday morning. Okay. Then really skip Europe session, go straight in the United States and GDP. Cool. A little bit backward looking. Was 6.9, expecting 1.0. Okay. Prices 7.1 to 6.0. Look at all that, man. Coming down hard. Okay. Okay, German GDP on Friday. Eurozone GDP on Friday. Cool. But more importantly in all of that is PCE on Friday out of the United States. That's a big deal. And then one thing I didn't cover, there's this speech here for Canada. I think there's something coming out. Also, maybe it's under low impact. There's a few things this week related to Canada that made me think when I was reviewing this earlier that the Canadian dollar might rebound a little bit, but GDP wouldn't be it. Where's my phone? Jim's like, yeah, very nice to know that. Made trading easier. Yeah, again, guys, the Central Bank of Japan told us is specifically as possible how to make money trading the Japanese yen. And so last night we can just look at yields and go, oh, okay. Now you know how to make money. Why? You looked at the yields. Why? Well, that's what the Bank of Japan wants. Where's my notes? I had some notes here. What is going on here? Where are my notes? Strange, where are all my notes? They were just here. How could that be? They must be under... Hang on. Hate that. It was all just here. And now, what's going on? Where is my stuff? It's weird. Yeah. My AI doesn't match their AI. Anyways, so I'm not going to cut on that, but I had notes somewhere. Mohammed, you want to risk as little as possible. Here's the answer, Mohammed. Look at how many trades you make per day. And then based on that, look at your average stop size. So let's say you do one trade a day is 20. So five trades a day is 100 trades per month. Okay. Let's say your average stop is 30 pips. That's 3,000 pips risked per month. And I want you to look at a month in which you lose every single trade. Okay, Mohammed? You've lost 3,000 pips. What percentage of your account do you want that to represent? 3% or 30%? You lose every single trade. I know it's impossible, but you want to plan for the worst case scenario. I would argue the answer to that would be 3. So now reverse engineer, because I don't know, nor do I care how much money you have in your account, but now you know how many pips you've lost, and now you know what percentage you want that to represent. So therefore, reverse engineer to figure out your lot size. And of course, you're going to find out you're grossly over leveraged. So now you should lower your lot size. And now you can sleep at night knowing that if you have the worst month of your life, it'll be okay. You'll survive. It'll be a small dent in the tank, but you'll continue moving on and you'll be just fine. Cool. So anyways, there's the calendar, a lot going on. Again, I can't remember why, but I thought there was a little bit leaning on that CAD. But right now, all commodities are getting crushed based on the continued and additional lockdowns in China. You're welcome, Mohammed. I hope that makes sense, and I hope I convince you to be a conservative, disciplined, long-term focused trader. Okay? I want you to have small lot sizes. All right, so anyway, an increase of the lockdown in China brings down Okay, this, although look at that CAD rally back. Okay, and then Kiwi, that's interesting. Okay. So anyways, quite a bit of push off of that. Oh, and now you're probably thinking, why isn't he talking about the election in France? Okay, that's fine. Let's do that. Okay. So that should, could create a relief rally in euro. So we'll take a look and see how all this came together. Let's start with yen pairs. Okay. It's been up and down all night. Okay. Here's where Asia was opening. I was a little late on my trades because I was coaching. But nonetheless, was able to jam a couple of in. London Open. Actually, it was here, right? This is Asia Open. This is London Open. Okay. So Aussie yen, let's take a further look out. If it were to continue to fall, where would it go? Well, you can see my entry is a vulnerable spot because it, technically, based on price action anyways, that's a likely move. So this might be a quickie takey profit one. Okay. So it looks like from my entry to the bottom here is 100 pips. Okay. So good little scalp. Now again, why this? China lockdown plus, okay, yield on the 10-year JGB was, right, was under 0.25. Okay. So, yeah. Once again, if you don't understand what that means and Japanese yield curve control, YCC, again, join FX Bootcamp. It's $88 a year. And in that now, you can watch the full, I think it's an hour and a half recording of a 3-hour meeting. And you will learn a lot of fundamentals of what's going on right now at the Bank of Japan. So that you should have been able to know before the markets even opened, right? So right in this point, you should have already known down. And when the day trading group met on Sunday, we talked about that. Okay. I'm in late. I should be short here, but I was there coaching. Instead of trading, I was sharing. So anyways, let's take a look. Here's the beast. Okay. That X is a down target based on a daily 21. So there it is. But going back to here on the smaller time frame, our target actually was here. So I should probably jam that stop. There you go. What? There we go. Now, the worst I could possibly do on this scalp I made last night is 100 pips profit. That's the worst I could possibly do. Now, the other one I only have 60 pips on, but let's take a look at this one. little different on Kiwi. Remember, Kiwi gained some strength overnight. So because based on the index. Okay, so let's see. My stop is here. Yeah, I'm only up very few. So I'll leave my stop at break even. And that's because this New Zealand dollar and the Japanese yen are both strong, right? Richard, you have a basic understanding, but you don't have a high enough understanding. Once again, watch the video at FX Bootcamp that's available to anyone that has access to the video training courses. And you will do a very deep dive into the weeds of fundamental analysis of the Bank of Japan's yield curve control. Okay? But yes, you have a basic understanding, but it's like you've watched, right? You've watched, I don't know, you watched race car drivers drifting on YouTube. Doesn't mean you know how to do it. Cool. Take a look at Kitty Cat. Just didn't want to sell this one. That's it. Sorry. I love Canada. Can't bring myself to selling it. Okay. But you can see we're kind of coming into a role reversal buy. Okay. And then Euro. Yeah, that's that. All I can say is I was long this. I don't remember. And then I quickly got out with I think I lost 20 pips on it or something like that. I think I was long here and then out here, which makes sense because that was, yeah. So this candle, I bailed. So I was long here and then I changed my mind. Which was good, I suppose, right? Question is, how possible is it to trade without fundamentals? Why would you want to trade with, I'd just say why would you not want to know? You could never be taken seriously as a professional trader if you have no idea what's going on. It's just, you're embarrassing. Not you, but that idea of, I don't want to know what's going on. Everything's in the price. It's just ridiculous. Nobody actually believes that. Okay? Go talk to hedge fund managers or Wall Street traders and say, I want to be a professional trader, but I don't want to know fundamentals. It's all in the price. You'd be embarrassing yourself. People would chuckle. So it's just amateur, that idea. Now people are going to get mad at me and post comments and stuff look, that's my point of view. Okay. Someone got mad at me because I said, I don't understand why the White House and Janet Yellen gave away $5 trillion of unproductive money. Of course, that would create inflation. And I got this big, long email of my arrogance and all that. Dude, I just don't understand why they made that decision. I disagree with that decision. But yes, I understand Janet Yellen has a PhD from Yale and ran the Federal Reserve Bank and ran the bank, the Central Bank of San Francisco, right? The San Francisco Fed. And was I think she was vice chair through the 2008 crisis with Bernanke, and then became chairperson of the board of governors and now runs the treasury for the White House. And I'm not smarter than her. That doesn't make any sense. But I disagree with her. I even think she's smart enough where she knew what was happening, but is now part of politics and kind of had to do that. And also I understand the government had to do something, but it felt like at some point the government got addicted to, we can do anything we want, and that's dangerous. And now we're paying consequences. Aaron, I don't have a birthday. All right. So there's yens. Couple hundred pips on yens. Yay. Let's take a look at some dollar pairs. What's going on? What's going wrong with the world today? I don't know what it is. All right. So euro breaking down makes sense, especially in a world of risk off. Now, why am I not short this? Because of the French elections, I was actually bullish on euro, but I'm bullish on dollar. I should say differently. I'm not bullish on dollar, but I fully recognize that dollar is strong and there's rationale for it. But seasonally, I'd want it to be weak. But based on more and more macroeconomic forces, I really care about the Chinese shutdown more than maybe even the Fed raising interest rates, because we know they're raising interest rates, and now we can argue about the terminal rate and all that kind of stuff. And there's a lot of arguing going on there, and therefore that leads to volatility in the price discovery. But it's clear when the second largest economy in the world is hardcore locked down. Okay, now we had someone in our Forex.Today community who said several times, a month or two ago, that people were being boarded up inside their apartments so they physically couldn't leave. And I haven't seen any evidence of that. Of course, you probably wouldn't see it. But Bloomberg reported over the weekend that there are certain neighborhoods in Shanghai and Beijing when an apartment building gets hit with COVID cases, they actually build a fence around it. And I'm like, okay, now that's Bloomberg saying, here's an apartment building and it's got 5 sick people out of 200 and they build a fence so that you can't leave the apartment building. You can go outside, you just can't leave. And I'm like, oh, okay. And so that's Bloomberg anyway. I was basically neutral on that one. Taking a look at Aussie Dollar. Again, I'm in late because I was coaching. But I can move my stop to break even for show. In fact, I have not too many pips. I have about 30 or 40 pips profit on that one. So I'll move my stop to break even and take a look. Okay. Clearly, you can see that I outlined that trade plan last night. Again, the day traders got together around here. And so I'm highlighting that, and we got pretty close to the target. It's not bad. So I can get out now and take 50 pips profit, but I think I'll let it run down, maybe get closer to 100. We'll see. Taking a look at Kiwi. Remember, Kiwi gathered strength last night, okay? And so I'm basically at break even. I have a slight profit here. I'm going to remove my risk significantly. I kind of want to get out of this trade now. So I'll risk now 15 pips. Where's that? Right there. I'll risk 15. If it drops down to this lowest low, so if we get to this number, I'll just jam it at break even. Okay. Ronnie, you're welcome. Thank you for being here. Okay, so I might lose 15 pips on that one. All right. Anything else going on? Pig Dog dropped like a ton of bricks. The problem with it is, like I said, I missed a lot of things because I was coaching. And I think I was just too late. This one I think I was in the cusp of that candle and it was too late, and I already had 8 or 9 trades open, and that's it. So I didn't want a 10th one, especially one that was late. I guess the news here is we've hit our projected low for the month. So be careful. Okay? Be careful. And the weird thing is, I'm reasonably bullish on pound dollar. And then kitty CAD, I'm bearish on this pair and it's going up, so I didn't want to trade it. Okay. So, phooey. But boy, we kicked off that support, huh? Holy smokes. Okay. Now, I'm not in on this long, and one of the reasons for it, one of the reasons for it is I participated in this short, and then, so in this gobbledygoo got knocked out, I think on this higher high got knocked out, so you got to like think mentally and emotionally, I was short this, and I understood the pop, but, in that moment, I was thinking maybe something like that. And so you watch it. Oh my God. And now it's out there. So last night I was thinking, well, maybe it rolls over and then goes up. It's doing the opposite. It's going up. And so maybe up leads to but nonetheless, this is an area price discovery I don't want to discover. Okay, cool. Let's do gold, oil, and Bitcoin, okay? What do you think? Okay, Bitcoin coming down, and that's a canary in the coal mine. That signals to me simply a risk-off moment. Okay, it's a risk-off moment. The plan earlier for bulls was, you see this little line here. Oops, let's do it this way in black. There's a little line here. You see that? And you may recall our trade plan, because we had a higher high, was to buy in this gray zone black line area for a higher low, higher high plan, which would be risk on. Dollar weakness, stock market up, so on and so forth. And well, that ain't happening. For all the fundamental reasons that have made everything else be risk off. Now, last night in the day trading group, look, it's just one of the things we talked about was the stock market. And I think I said down Monday or Tuesday, and maybe a small kind of little bit of a recovery Wednesday, Thursday, or stabilization Wednesday or Thursday, or closer to the end, maybe Thursday, Friday. And I thought earlier in the week would be down because of a busy earning season schedule, and then maybe stabilization and maybe a little bit up by the end of the week, and we end flat, but maybe next week is up. I don't know. But down today wasn't that shocking. Now, the cool thing about being a global trader is the stock market hasn't even opened in the United States, and I kind of already feel like we've done Monday. So the question I was asking people last night is, if the stock market drops today, we have a 2.5% drop today, do you have cash available to buy? Are you a buyer, or are you afraid? Is it the end of the world? Are we about to go into a deep recession? Are you going to lose your job? Do you need your cash so you can buy food and pay for your rent? Or are you a buyer of assets when prices are low? There's a big difference, because one trader, one investor, one trader, whoever, one person thinks this is a dip and someone else thinks this is a crash. Okay. And the interesting thing, or one interesting thing, is if you go back 50 years of trading, they'll tell you you'll earn, I don't know, XXX% return in the stock market if you bought 50 years ago and all that kind of stuff, right? Whatever it is, 300%, 500%, 1,000%, whatever. But you know, if you invested and bought the stock market 50 years ago, you'd be fine. You'd be rich. Okay? And that's the whole point of investing. Now, the ugly part of that is whatever that number is true. Let's say this is 1,000% return on investment. But the key is you bought 50 years ago and prices were a lot lower 50 years ago. Now you have 1,000%. Now, the interesting thing is to get that return, you needed to buy the drops / end dips. So you bought after the dot-com crash. You bought after the 2008 crash. You bought after the COVID crash. So for example, NASDAQ is down 15% this year, right? And you're worried that this is a recession, that this is the end of the world. The stock market is crashing. It's out of control. There's blood in the streets. It's all over, man. Game over, man. Game over. But if you had bought the COVID low, and by the way, I set it up the exact week, so you didn't even have to be precise. But let's say you bought after the COVID low, you're still up 85% minimum. You might still have doubled. Okay? And I don't mean like you bought a bunch of growth stocks. No, you just bought the S&P 500 or something, right? Or whatever. So you bought some stocks. Okay? So you bought a $20 stock. Okay? It went to $50. And now it's trading at, $40. Okay? $40. And they're like, oh my God, right? Okay? If it was a $50 stock and it's lost $10, okay? It's actually this, right? Whatever. Significantly down, right? It's down 20%. But you're still up 100%. And that's the whole idea. So people are only losing money in the stock market if they bought high. Well, who cares about them? I don't care about them. Who cares? Who cares? Who cares about them? Bought at the top. Who cares? Okay? So it's not the end of the world, is it? Now, if you bought a whole bunch of growth stocks that are trading at 1,000 times earnings, then you need to go out of business, and that doesn't matter. So if Kathy Wood loses her ARK fund, I don't care. Okay? Hey, she was up 1,000%. Now she's down 1,000%. Who cares? It was a dumb idea to be fully invested into growth stocks, but she sold an idea to a bunch of dumb money. And now they lost. Yeah, good. I have no ill will to her, but for someone that put all their eggs in one basket, like let's take billions of dollars and plow it into, unicorns, billion-dollar companies that don't earn any money, then screw you. You need to go out of business. Okay, if you love the upside, what's the chance that she used to drive around in a Bentley? I mean, come on. So she enjoyed the upside. She has to ride it out the downside. Cool. Anyways, gold has come down. Yeah. Yeah. So notice this, like gold is down. And then I'll just skip that. Gold is gold. And then oil is down. Okay, imagine what this could do to commodity prices. I mean, inflation. Let's do trading economics. Oh, we'll just throw it down there. I just wanted a bunch of prices. Yes, I'm looking for custom-made shoes. Thank you, Google. 10-year Japanese government bond, still below 2.5. So no YCC at the moment. Look at commodity prices like crude oil and gold, you already know. I just want to show you some charts here. Okay. Okay, that's copper prices this month. Okay, deflationary. So oil down, gold down, copper down. Take a look at iron ore. Okay. Stable from here, but it was 225 and now it's 145. Okay. Now below 100 would be better, but hey, I've seen worse. Okay. Now, I don't know if we're going to have it here, but there is one commodity that's probably way up right now, and I don't even know if they're going to have it. Here it is. Palm oil prices. There's a shortage of palm oil, and the largest export of palm oil in the world, Indonesia, or is it Malaysia? I guess it's Malaysia, sorry. Malaysia has shut down its exports because there's a shortage globally and in particular in their own country. And yes, by the way, I do use this air filter. It's right there. I don't have that. I don't have Starry Night, but yes, I use Rabbit air filters. Thank you. I mean, it's embarrassing, right? I'm trying to show you economics, and Google's like, all right, this a-hole wants custom-made dress shoes and ridiculously expensive cigar air purifiers. I'm like, thank you, Google. But anyway, so these prices are up. I thought it was Indonesia. I guess it's Malaysian palm oil. Highest in 6 weeks, approaching after the Indonesian president announced a decision to ban shipments. All right. Okay, so it was Indonesia. So anyways, prices are up. There's a shortage. Yeah. Yeah, it was Indonesia. Yeah. I was reading here, and I'm like, Malaysian palm oil futures. But okay, it was in Indonesia, yeah. And Richard says, remember, it was free money boosting stocks anyways. Yeah. It's all right. So, but what I'm trying to show you is people were very upset that there were high commodity prices. Now they're very upset because they're crashing down. Sure, Ashish. Yeah. But what else is going on? The Japanese yen is weak. The Chinese yuan is weak. Oh, there it was. Is this going to give us no currency? Huh? You see, the Japanese yen has been tanking, and so has the Chinese yuan. China has also cut the RRR, the reserve requirement ratio. And they announced recently, and I mean on Friday or Saturday, the Chinese government made an announcement or sent out a press release about them instituting certain policies to create demand. Cool. So, yeah, they're in trouble. Okay. But look at the value of the dollar versus the Chinese yuan just in the last couple of weeks. Okay. Obviously, there's a competition between China and Japan. Now, I don't know if they have yuan yen. Is there such a thing? Probably not, but it'd be interesting. Suppose you could just create one, but cool. So I have, you can see here, I have oil going up. It's not a prediction, it's if then. I spent Friday, I was scalping oil this way, and I exited at the end of the day at break even. So I, it was up, down, up, and got out there. And it turned out to be a good move to get out because now it's dropped very significantly. So this was sort of like, if it bounces back up, then I want to try. I might do some oil scalping again today. We'll see how it all works out. In this case, maybe I'm selling. I don't know. We'll see. Maybe, we're low enough, but maybe I take this back up from a smaller time frame and say it's just too low. So it's one of these things like, for example, if you were a scalper, you could buy it here and drop a stop here or here for an inverse head and shoulders type play. Okay. Remember, if you bought it at 97.50, 98.50 is here. That's equivalent to 100 pips. Okay. 99.50 is here. Okay. It's already fallen from I closed basically at 102. So it went from 102 to 97 already. Okay. You might look at that and understand that since Friday's closed, if you were going to compare this to Euro USD, that's a 500 pip move. Bro. Good deal, bro. Okay, guys. Good deal. Okay, guys. Okay, guys. Good deal. Good deal, bro. Yeah, boy. Huh? What do you stink? So we covered gold, oil, Bitcoin, iron ore, copper, palm oil, dollar pairs, yen pairs, and we covered the calendar. Could you please click the like button? Maybe tell YouTube this was quality content. And, okay. It doesn't matter. I'm giving you the equivalent, Richard, the equivalent of euro dollar pips. So you're like, okay, Wayne, if I traded one mini lot short on oil on Friday's close, and on now that it's Monday morning at 9 a.m., how much money did I make on my one mini lot? $500. On a mini lot. And you're like, dude, that takes me a week to make that kind of money. Maybe a month to make that kind of money trading euro dollar. You understand? You're like, $500 on a mini lot for Euro USD might take you a month. That's what happened this morning on oil. So I'm trying to give you a sense of scale. Okay, so $1 is the same as 1 penny in euro dollar. Okay, now with that, right, with that comes additional risk, of course. It's fairly easy to lose $1 on oil, and it's kind of difficult to lose 100 pips on euro dollar. Now you might disagree and say, wait, man, it's easy to lose 100 pips on euro dollar. Oh, all right, we'll address that. Where's the Cisco kid been? You know, last time I talked to him was in New York City, and he was working his butt off on a big project. Okay, so he's still sucked in his old world, man. He's still in the old world of JOB, but we're all pulling for him, huh? Master Trader says just stretch the stops and risk a small percentage. Yeah, but that's what it always should be. Okay. And the reason Master Trader says that is, when I was scalping oil on Friday, it would go up 40 cents. And then 15 minutes later, not just down 40, but I'd be negative 40, which means the spread in like 15 minutes could be the same as 80 pips. So think of it as an 80 pip 15-minute candle that closes as a doji. And you're like, 80 pips? In a 15-minute candle, 80 pips is a full average daily range. Yeah. Drop your lot size. Maybe you do micros on oil. Okay? Right? I don't even know if you can do that. I haven't tested that before. 0.01. See, I don't even know if that worked. My machine's been slow today, though. Yeah, I guess you can't. No, don't do that. Okay, that one, yeah, I can do mini, but I can't do micro. Yeah, you can do minis, but you can't do micros. All right, well, I guess I'll throw a stop on that. Okay, so that's me risking 100 pips right there. Equivalent. Different brokers have different regulations. Yes. Yes, I'm just saying my account can't do a micro. But then again, if you don't have enough money to trade a mini lot, you should not be trading oil is the other thing. What you should be doing is trading a demo account, saving your money. You should also get a job, a side gig where you can earn money and save that for your trading account. 2 or 3 years from now, Okay, 2 or 3 years from now, you would have learned a lot about being a trader. You would have learned a lot about technical analysis. You would have learned a lot about fundamental analysis. You'll understand trader psychology so much better, and market psychology and behavioral finance. You'll understand seasonality and the whole idea of patience and discipline. Dude, you say you worked a side job and saved money for 2 years? Yes, you're patient and disciplined. So now, 2 years from now, you have all these skills and you're patient and disciplined, and now you're bankrolled. That's what you should be doing. So if you can't afford a mini lot on WTI, you need to stop trading and you need to start saving your money and bankrolling your small business. You can't start a restaurant if you had got no money. You can't start any business if you ain't got money. Nobody says, well, I'm going to start a restaurant so that I can make money. And once I have money, I'll expand and buy a second restaurant. Dude, what are you, delusional? What's wrong with you? Right? Gee whiz. So you don't start a restaurant with no money so that once the business is up and running, you'll have money. No. Any business, you must be bankrolled. In particular, to get through the tough months. The last 3 or 4 months have been tough. If you've had to pull money out of your trading account because you're in tough months, dude, you're destroying your business. So every single business on the planet needs to be bankrolled properly. And if you don't have enough money for your Forex account, spend the next 2 or 3 years developing the skills while you are saving money. So when you have skills to deploy, you'll also be bankrolled. And if you read my book, you want to go years without paying yourself from your Forex account. Barry's like, start a restaurant these days? I don't think so. Yeah, but starting a Forex account with no money and no trading skills is also a dumb idea. I don't know how to trade, but I'm going to trade Bitcoin and make money. I want to become a cryptocurrency billionaire. Do you know how cryptocurrency billionaires and millionaires became millionaires and billionaires? They bought Bitcoin at $1, not 31,000. So what are you going to do now that it's only $31,000? Well, I'm going to buy it at 31,000 and trade it to 100,000. First of all, that's probably not going to happen anytime soon, if at all. And by then, that's only 300%. So your $1,000 will be worth $3,000, but that ain't going to happen either. So be careful. Okay, just be careful is all I'm saying. Don't get mad at me. Listen to my message. If you don't have the skills and you don't have the money, you shouldn't be trading WTI anyways. Instead, you should spend the next few years crafting your art and becoming an expert in the foreign exchange market, both technically and fundamentally. Meanwhile, you're working a side job as you're learning Forex and doing your regular job and raising kids and being a half-decent spouse. And then on top of all of that, you're working a second gig and you're saving all the money so that when you're ready to trade Forex, you have a bankroll. You have a little bit of cash. I don't know what that means. 5 grand, 50 grand, 500,000. I don't know. It doesn't matter. The only thing that changes is the lot size. Okay? But if you're this idea, you're going to turn a $1,000 account into a $50,000 account in this year, you don't get it, and it ain't going to happen. You don't get it. You don't even get the concept of what you should be doing. It's like on a different planet. Okay. Richard says, yes, sir. Like I own a car wash. Yeah. And when that's slow, you have vending machines all over. Yeah. Wonderful. Okay. Interesting, right? High leverage guys on YouTube make it look easy. It's dumb. Okay, it's just dumb. It's you're worshiping a false idol. Okay? When you speak to a professional investor, and their clients, of course, because a professional investor invests other people's money. So high net worth individuals and pension funds, endowments, corporates, all these types of investors. You have to understand they already have money. They already have money. Nobody wants you to take high risk. What they would rather have is a reliable income stream from an asset class that's not correlated with all the other investments you have. People would rather have a steady income. Some liquidity would be nice when things go wrong. Non-correlation, meaning if you only make money when the stock market's going up, and then might as well just own the stock market, especially if it has lower volatility and similar returns. Okay? So, you know, it'd be great if you had those things. That's what people want. Consistency. Low risk, reasonable returns, but something they can rely on. Okay? But so what kind of person takes high risk? Somebody with no money. Because you have nothing to lose. You don't have much money, so you have very little to lose. And the upside, even if it's far-fetched, is so much more attractive than just like, who cares? If you lose the little bit of money you have, you'll still be broke. You were broke when you took the risk, and you'll be broke after the risk. So it seems pretty good. Okay? So you got to be careful. People with money are more concerned about, moderate growth, levels of inflation, and consistent, reliable returns with lower risk. Okay. Whatever. You've heard that all before. So I guess I'll go. The market's going to be open soon. Daddy's got to go to work. Thank you for being part of this community. Please visit fxbootcamp.com. Please visit tradersway.com. Have a wonderful day. If you're in my day trading group, I'll see you this evening at 7 p.m. And then you'll be trading again with Ryan at, 2 a.m.? Okay. Day trading group meets twice a day. Amazing. Again, if you want to learn more about the YCC at the BOJ and how to trade those yens, all you have to do is visit fxbootcamp.com, pay the $88 for a year. Not only will you get 65 hours of training videos, you get a sample of what the swing trading group is all about, and you'll learn all of those things, because that just occurred on Thursday, and what I covered on Thursday and what I covered last night has made me money today. That's some good values. So without further ado,
peace on earth. May the pips be with you. May your profits be above average.
Later, Gator. Have a wonder.